If you want to know how to make these type of profits every single day, don't miss out on this video and don't forget to hit the subscribe button. But first we go deeper in, we need to understand that we're going to work with market structure. The market structure works, as you know, it has its uptrends and its downtrends, okay? So what we're going to do is we're going to focus on the break of structure. So what this means is that the price is having an uptrend and it breaks down, okay? In this case, we're in an uptrend and it breaks down. So we have a market structure that is breaking to the downside. So there's two ways of using this. We can either wait for a pullback or we can enter directly once the price has broken. But we must keep in mind as well that sometimes the market structure does some type of manipulation where it breaks up, it breaks this market structure level, and then it breaks down and breaks another market structure level. So we must keep an eye on this because sometimes we can have some fake breakouts. And this is why I'm going to bring you two ways of using this strategy. Obviously, if we look at a chart, sometimes it's not so easy to find this market structure shifts. So we can use an indicator that is called zigzag, and we can use this one with Fibonacci levels. We're not going to use the Fibonacci levels at the moment, so we're going to go to settings, and what we're going to do is take off the show Fibonacci. So we have a clean market structure. If you want to make it a bit more near to the price, we can just lower the period and perhaps put it at 7. And that way you'll see how the zigzag is more near to the actual market structure. So once we got this, it's even easier to find. But obviously with this, sometimes we can have more fake outs because it's not 100% the market structure, but it's a good indicator to use if you don't know to read market structure correctly. So in this case, we can see that here we probably would have had a bad entry because the market structure level was this one here. Okay, this was the last market structure that made the last high. So me personally, I'd have entered in this position here, entering a short down here, putting the stop loss always above the last swing, or we can put it above the last recent swing that broke the market structure level and go for the one-to-one risk reward. And if we want to do it with a zigzag, it would be more or less the same. We just have to trace our market structure level, and once price broke it, we'll be entering down here. Our stop loss will be at this recent high, and we'll be aiming for a one-to-one, the same as before. The second way to use this is quite simple as well. We'll just wait for the market structure to break, and once it's broke, we are gonna wait for price to come back to this level. So we can see how it broke the market structure level and it came back again, and we'll be entering the market just at this position here, targeting the stop loss just above the last high and the take profit back to one-to-one. And even with this way, we could even target a take profit a bit below it because we know where price made the last low, so we can have a bigger risk reward. This will depend on how we want to trade, how many trades you want to do a day, if you want a quicker trades or you want to keep them a bit longer to see if you can catch some more profits. But as you can see, it's quite simple, and you just have to rinse and repeat. As we can see here, the market was doing a downtrend, it made this last low, and it broke this high over here. So what do? We enter a long position just when the price broke above. Stop loss just below the low. This one made a risk reward of 1 to 4 in total. Obviously, we're going to keep targeting the one-to-one, but as you can see, we have a huge potential by using this trading strategy, especially on Bitcoin in 5 minutes. It's got huge potential to even add any different changes you want to add to them. It's quite flexible, and we can add all type of indicators or any type of setups or confirmations with this strategy. You can see as well the handicap of perhaps waiting for price to come back. In this case, we would have had a great operation right up to here. But if we waited for the pullback, when it came, it would have headed to the stop loss. But obviously, what we can do here is wait for confirmations. As we can see here, price went straight through here. It didn't have any type of retracement. And it's different from here, where we had a nice rejecting candle, and we had, after that, an engulfing candle to the downside. So we could be entering easily the trade more or less around here. And this is how you can catch the trades with confirmation and still having a great risk reward. So I hope you've enjoyed this video. I hope you've enjoyed this trading strategy. Let me know back down in the comments if you knew it, and I'll see you next time.